Hi there, Pat Strubbe, founder and owner of Preservation Specialists, and one of the things we're trying to do this year is just bring you more updates, things that are on our mind, most importantly, things that we're hearing from you that are on your mind. So we're going to try and do this at least monthly. So this is our commentary for May, and what's on the news, what's on your mind? Well, obviously, there's a lot going on in the world. The most pressing thing that we are hearing the most about right now is that the stock market is having a rough time. So as of this recording, the U.S. stock market's down about 17% this year. And so what do we think about that? Well, of course, we know the markets, they go up, they go down. But one of the things that we believe at Preservation Specialists is that, advisors need to get licensing and they need to continue that. But there's kind of a bare minimum there. And we really believe that we always need to be learning. We always need to be growing. I'm a big reader. So in addition to going to conferences and listening and watching things, trying to read books, and very fortunate to have found a book that's very timely right now. It was just released, so it's very fresh information. The author is not very well known to most individual investors. His name is Antti Ilmanen, and he wrote a book called Investing Amid Low Expected Returns. It just got published, so the information is from the end of last year and early this year. And like I said, he's not that well known, but very, very highly regarded in the investment world. So I just wanted to point out a couple of things and kind of bring it back to what's on everyone's minds right now. The first thing that I thought was really interesting, it's not very often that I read something that in my 25 years I haven't seen before, but he really had something very fascinating. So if you're interested in investing, hang tight for a second here, because what he talks about is, you may have heard the idea that over the last about 40 years, we've been in what some people call a bond bull market. And what we mean by that is, if you think back to the early 80s, interest rates were sky high. And of course, there's been some bumps in the road, but it's generally been going down up until the beginning of this year, when they've basically been near zero for a long time. Well, as interest rates are dropping, that drives up the value of existing bonds. So that has meant that it's been a very good time overall over those 40 years to be in bonds. One of the things that the author points out is it actually had a similar effect on the stock market too, and that's something I've never heard anyone argue. So what he shows is, from 1981 to 2020, stocks out-earned, if you had money in the U.S. stock market compared to in a money market, it did better by about 7.8% per year. However, 2.7% of that is purely because interest rates were dropping. Now, that's really interesting to me. That's actually more than a third of the total returns. So if you're an investment geek like I am, that's pretty fascinating. There's a good chance you're probably saying, why do I even care about that? Well, where are we right now? We have been at almost zero interest rates for a long time, and now we're starting to see those rates rising. So they're not dropping anymore, they're going the other way. So that's a pretty big deal when it comes to Antti's book, as far as the reason he's expecting low rate of return for both stocks and bonds going forward. So one of the quotes from the book is, let me pull it up here, having essentially borrowed returns from the future through multi-decade windfall gains, we're in for low returns for the next decade or longer. Now, our advisor team has been watching the economy, watching the market, and we've been thinking the stock market looks expensive for quite some time, and we're often surprised that it continues going up. And so this year hasn't been a shock to us, but it's encouraging to hear someone who's so highly regarded seeing things the same way. So that's one of those things we certainly want to be watching out for. We don't want to be counting on stocks and bonds for high returns in the future. And in a second, we'll talk about what do we do about that. The other thing he brings up that I love this phrasing is, if that is in fact true, the other thing we don't know is it going to be slow pain or is it going to be fast pain? What does he mean by that? Well, slow pain might be the stocks and bonds averaging close to 0% over the next 5 or 10 years, and maybe it's up a little one year, down a little bit another year, but you're just not getting anything out of it. Of course, fast pain you can probably imagine. That would be like a stock market crash. And of course, that's what we all want to know, is why can't he just tell us when that's going to happen? And of course, we don't know that. That brings me to the last quote from the book that I really loved. And he says, "My investment beliefs favor humble forecasts and bold diversification. Now that kind of made me think about, do you remember when you were a teenager or a young adult, and did you ever feel like you knew everything? I know I did, and I think back to early in my career when I was young, I would try to predict things like the next market crash. And of course, doing that type of predicting can help teach us humility, because it's very rare that we get that kind of thing right. So I think to summarize all this, I would say we do believe that the math shows stock and bond returns in the future are likely to be low. We just don't know how that's going to happen. We don't know if there's going to be a stock market crash, if it's going to be, remember that idea, slow pain or fast pain. However, that brings us back to the last comment that the author made, is he believes in bold diversification. Now, that's not a phrase that I've heard before or used before, but I absolutely love it. And the reason for that is, if you go back to my last book, The Retirement Secret, I talk about how there's no such thing as a perfect investment, and that's the reason that we have to diversify. If there was something perfect, then we wouldn't have to worry about it. But there is nothing perfect. We have to diversify. And I love the idea that now is the time for bold diversification. It's not a time just to spread your money out in stocks and bonds and figure everything's going to go fine. We need to be more proactive with the types of investments you're using. Now, if you're a client of preservation specialists, you probably recognize this. That sounds a lot like what we do, the endowment approach, that we divvy everything up as much as possible, and then we're, of course, monitoring that, trying to make improvements along the way. So you're already there. If you're a client of ours, we're already watching that for you. We're trying to help you on that path. If you're not a client of ours and you're not sure if you're taking advantage of bold diversification, or if you're worried about what's going on with stocks and bonds, call our office at 803-798-1988. Set up a call or a meeting with one of our advisors. We'll be happy to provide you with a review at no cost and no obligation. Hope you found this helpful, and we'll see you back here next month.